Hello everyone. So in this lesson we are going to see how to trade the futures market. Alright. So we are going into the practical aspect of the futures trading. Okay, so first you have to open your Binance app, open your Binance app and then you go over to derivatives. Alright, and you will see two features here. Alright, here is the USD features and here is the coin feature. Okay, so we're going to stick with the USD or BUSD feature. All right, so because this one is the kind of contract that has the kind of contract that you know is done with a stable coin. Okay, so you going with a stable coin, so the markets, the futures markets don't have to, fluctuate along with the coin you are using. For example, if you are trading with Bitcoin in your futures market, if it were to be Bitcoin, okay, when the price of Bitcoin goes down or goes up, it will affect your position. But with stable coin, there's nothing like that. Okay, so there are basically two types of futures trading. Okay, there are two types of futures trading. We have the quarterly contract and we have the perpetual contract. Okay, so the quarterly contract is the type where you have a specific date when the contract will expire. Okay, where the perpetual contract is a contract that doesn't have expiring date. You only get liquidated when your position is on the lower side. Okay, but in quarterly contracts, you get liquidated when the price, the time of the contract has expired and your position is not in the and the market is not in your favor. Okay, so let's go into the futures. So when you open the futures market with the web version, all right, this is how it's going to look. Okay, this is how the interface will be like. Okay, so few things to explain here. If you come over to the right side here, you see cross and you see the leverage. Okay, so in this cross is where you choose the um the the type of leverage you want to take. Is it a cross leverage or a um isolated leverage? Okay, so you see cross isolated. Here they try to explain it. Cross margin mode or cross position under the, okay, let's just forget it. Let me just explain to you in the simple way that you understand. So if you are doing cross position, okay, your liquidation will depend on the amount that is in your um you know in your um overall portfolio, trading portfolio, okay, in your balance. All right, so the market will be maintaining the will be maintaining your position with regards to liquidation based on your balance, your overall balance. So even if you open a position now, okay, and you still have, okay, let's say you have $100 in your position in your balance. Okay, so you use 50,000 to open a position. Okay, so your leverage will be weighed based on the balance and the amount you have in your position. Okay, so that balance will be used to supplement if the market is not going in your favor. Your balance will be used to supplement. Okay, but in isolated, your balance will be isolated from the position you have taken. Okay, so that is if you open a position, if you have $100 and you open a position with $50, the market won't touch your remaining $50 in your balance. Okay, so everything will just depend on the one you have um um in your position. Okay, so here we are going to, okay, this one is about leverage. Okay, so I would recommend you to use the isolated always. And if you open a new, if you just click on it and you click confirm, so if you open, sorry, if you choose a new trading pair, make sure you also change the type of leverage you are taking. Okay, otherwise it won't be changed by itself. So here too you have 20 times, 10 times, and here is where you have the amount of leverage you take. Okay, so you can adjust it to anything you want, 100 times, 50 times, 100 times, to anything, to 125 times. Okay, but this is just a death trap for you. I would advise you don't exceed 10 times, but just don't exceed 5 times, but maximum do 10 times. Okay, so in this thread we are going to be doing something like 5 times. Okay, so we are going to try, we are going to try place a position now. Okay, we are going to try place a position and see if you can close it as fast as possible. So we confirm it. So we are going to trade short. Okay, first let's import money, let's transfer money to our trading account. So we click on transfer here. So we are transferring from our spot to our futures. So we just have to take USDT. Click on now. Yeah, amount. We just have to take, let's do $20. $20. Let's confirm it. Okay. So we are going to change the coin. We are not going to trade BTC USDT. Let's trade something like Dogecoin. Okay. So we have changed to Dogecoin. Okay, so we are going to short Dogecoin at this level and see if we can get down to this level. Alright. So it just I didn't analyze this. I'm just trying it out for us to see. So for this, for the sake of this lesson. Alright. So here last price oscillated 5 times. Okay. So we are going to short Doge. Okay, I'm trying to put the market price. Okay, let's put it in the market, so instead of the limit. So that's what I was trying to do. So it's a market. You already know what this means. All right, you already know what this means. Okay, so we short. Good, it's filled and our position has been taken. Alright, so we have taken a position and here is it. As you can see now, here is the position. Okay, so because we use 5 times, we are given 349 Dogecoins. Okay, we are given 349 Dogecoins. This is our enterprise. This is the market price here. Okay, so this is the liquidation price. That means when the price of Dogecoin goes up, when the price of Dogecoin goes up to 344,333, will be liquidated. Okay, so when the price of Dogecoin goes up to somewhere up, we are going to be liquidated. Our money will go. Okay, but if the price of Dogecoin keeps coming down, okay, we keep making money. All right, our money will keep increasing. Okay, so you can see the price of Dogecoin is actually coming down here. The price of Dogecoin is coming down, so that's why it turned to green here. So we are at 0.19% initially, and we have 0.05 USDT. Okay, so here is just how to place the order. Okay, and now you have learned how to change from isolated to from cross to isolated, and how to choose your amount of leverage. Okay, and you've also learned how to fund your futures account. You've learned how to fund your futures account, and finally you've learned how to place an order. Okay, you have learned how to take a position. Okay, so you can either go long or you go short. So if you are going long, that means you want the price of the coin to go up. Okay, that's, you are betting that the price of a particular coin will go up. Alright, if you are going short, you are betting that the price of a coin will go down. So for this tutorial, we just bet, short. Okay, we are betting that the price of the Dogecoin will come down. Okay, so but if that didn't happen, no problem. So in our other courses, we'll see how to protect your in other lessons, we'll see how to protect your 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 position. That's how to exit the market, when to take profits, how to escape and all that. Okay, so we see that in the other lesson.